Bloomberg opened up their own symbology data set in aid of making life a lot more easier. So yeah, as I said, symbology is about correctly identifying traded securities across different vendors. And QSIPs tend to be, well, QSIPs are used in the US. It's operated by S&P, and CDOLS is a London Stock Exchange generated global identifier, and ISINs also is kind of reasonably popular. And it doesn't just cover equities; it covers fixed income and other asset classes as well. And then, of course, there's your local ticker, which in this case for BHP is BHP AU. Alrighty. So whenever you build a quant data pipeline, having the appropriate checks and balances in place is critical, which is basically what quality assurance is about. Basically, quality assurance is making sure you get the data when you expect it, i.e. timing QA, that you get the coverage in your data sets is there. So basically checking for missing stocks that suddenly go in and out. Suddenly, so for example, you've got 1,000 stocks in your universe, and then the next day your data vendor only gives you 500. Well, that's an example of your coverage dropping. That's warning bells. There's also quality assurance regarding deltas. So if you get big changes in a particular stock and it doesn't make sense, you need to be watching out for those as well. And then lastly, there is corporate action quality assurance, which basically surrounds when you get a corporate action like a rights issue or a placement or a bonus shares or various other forms of capital raisings, and that all affects the actual balance sheet. Oh, sorry, not balance sheet. It affects the capital structure and the number of shares on issue, and that area is quite fraught. And actually having the appropriate quality assurance around that is critical. Otherwise, you could start trading on incorrect information. So, what I'm going to do now is a bit of demo. Hopefully this works.
Do you want to take it to here?
Yeah, that'd be ideal.
Yeah.
Yep.
Great.
Alrighty, thanks. Has anyone ever seen a screen like this before? So on this screen here, we've got a bunch of different markets. I think there's commodities up there as well. So basically there's a bunch of different markets: Europe, covered by Europe, by Americas, Asia. So that's basically the equity space. FTSE 100, the large caps in the UK. Then there's the Euro Stocks 50. Then there's the different markets. And of course you've got S&P 500. There's the All Ordinaries. Actually, All Ordinaries used to be the benchmark index in Australia. Maybe might have been about 10 years ago. S&P and ASX did a JV, and the new institutional benchmark, the ASX 200. But the All Ordinaries still continued and still does, and they're a highly correlated series, and so it tends to be pretty popular. Also, you can see a bunch of other asset types. So besides equities, which is that space there, you also got you've got a bunch of sort of commodities. So your different types of oil categories, gold, silver, and basically what this is telling you is what the each of these commodities or equities or government yields or what have you, or how they've actually moved on a day-to-day basis. Actually, I think the European markets are actually, well, they are live right now, so you can see that's why they're all flickering. And what's happening is that these are all benchmarks that fund managers are actually being measured against. So, say for example, you might have a UK fund manager that's got a UK fund that's just basically made of stocks, made up of stocks that are traded on, say, the FTSE, on the London Stock Exchange, and they're benchmarked. They might be benchmarked against the FTSE 100, the large cap index. There'll be a bunch of stocks basically that make up this FTSE 100, and as those share prices of the underlying components of that index changes, you'll get changes here as well in that last price. So that is constantly being updated, and that changes relative to the close price of the day before. What else have we got here? There's some futures. Oh, there's some moving averages there as well on crude. Let's have a bit of a look. Does anyone have any questions? So this is the kind of screen that you might see on a Bloomberg machine. It's kind of similar. My personal preference is I actually don't like Bloomberg machines. The GUI front end is fast, but it's just not particularly nice. All right, let's have a look at something else. Company snapshot. So there's a lot of stuff here. There's a whole lot of stuff about news, and you can do heat maps, etc., gainers and losers. I'm going to take you to the company security area. Is there any particular stock that anyone would like to have a look at the financials and prices for?
General Electric.
All right. I actually don't know how to look. General Electric. There we go. Easy. How easy is that? Should have guessed the ticker was just GE. GE is often regarded as a bit of a microcosm of the US market because it's not just in electric-related businesses. It owns, I think it owns NBC and a whole lot of, I think there's some finance businesses in there as well. So it's actually a really highly diversified part of the highly diversified business, and regarded as a kind of like a microcosm of the US market. So in this area, sorry, just give me a second. I'm just going to move a few things around. Just mucking around. Should be right. Alrighty. Probably a bit easier this way. Let's do a bit of an overview so you can see what type of information is available. So this is a company snapshot of GE when it comes up. Gives you a bit of a business description at the very top, as well as corporate information, forecast earnings. So I was talking before about broker estimates, and these are the forecast earnings for, actually, these are full year earnings, sorry, not forecast. The ones with E here mean estimates. And there's various different segments. So you can see here before I was telling you about the different segments within GE, and I've got their financing business, which made a revenue of 41.4, and the power and water as well as aviation. I think they're quite massive into aircraft leasing. And then there's your price series for GE as well. Other aspects about that you'll be able to find on these big vendors are things like the entity structure, because this company actually, which is listed on the stock exchange, would actually own a significant number of other companies, and it doesn't seem to be appearing, which is odd. Oh, here we are.
Yeah, so you can see here, this gives you a bit of a, I don't actually know how to shrink this without a mouse, but it gives you a bit of a feel. There are lots of different entities within the whole entity structure. These diagrams, by the way, I don't know if any of you guys have heard of D3 before, but I'm pretty sure these are known as D3, data-driven diagrams, which a guy called Mike Bostock was behind it. And he's actually the head of infographics at New York Times. And there's some pretty, basically these are interactive graphics, pretty funky stuff. On top of that, you can look at a bunch of price information. So here's your price summary, and it comes up. So it gives you a bit of a feel for number of outstanding shares. There's your market value. So that's 274 billion US dollars. It's one of the largest stocks. It's probably in the top 10 in the world in terms of their market capitalization. It's about the same. I think it's about the same size as Microsoft now. Of course, Apple, which I think is about, I don't know, is it 700 billion? That number rings a bell. Is obviously the largest stock now in the world. It's the largest stock because it's being driven by the amount of cash flow and earnings that are being generated by the business. So the more earnings that the company is generating, the greater the price. And so as I was explaining before, the underlying economics will seep through and be embedded in the actual share price of the company, which in this case is 27.25 for GE. This price area, by the way, describes a lot of the market-related data. So before I was talking about accounting data, estimates data, and then price-related data. A lot of the signals, such as momentum, which is a price-related data, can be calculated by taking the price at two different points and then working out what the actual return is. So say the price starts at 200 back in, actually it's not 200, this is a rebase series, but if it was 200, then if you were to look at a momentum signal, it would basically tell you what the return has been over, say, a 12-month period, and that looks like it's around about 50% return over that period. That 50% return is actually one of the signals that we will use from an alpha perspective in our multi-factor models. Alrighty, so that's price. Let's look at, well, we can look at a few things. There's ownership. Ownership data is interesting because it can tell you what's happening, who's owning a company, and even potentially why. There are some activist shareholders out there that, as I said before, do actually go out and look for companies that they think that they can get more value out by becoming an agitator for change. So quite often the ownership statistics can show that up. What this is saying is that out of all the shareholders, you have 56.1% are actually owned by institutional shareholders. Who are institutional shareholders, you ask? Well, there is a number of different types of institutional shareholders. One of the types would be just your normal fund managers, your long-only fund managers, your BlackRocks, your State Streets, etc. And then there's also hedge funds. They're regarded as institutional. They're a lot smaller in size, and also activist investors are in that category as well. Oh, and sovereign wealth funds. What's the biggest sovereign wealth fund in Australia? Does anyone know?
The Australian
Future Fund, perfect. It's got about 105 billion, I think, the last time I heard. There actually are a stack of industry funds out there that are almost as big, like Aussie Super's, I think, about 80 billion. It's not technically a sovereign wealth fund or anything, but there are actually some, but it is an institutional fund. But the Australian Future Fund is probably one of the bigger ones. The actual biggest sovereign wealth fund in the world is actually the Norwegian sovereign wealth fund. Anyone guess why it might be the biggest in the world? Okay, I'll give you a clue. It shares some sea between Scotland and Norway. It's oil. Yep. So a lot of the money that came from that's actually that the government have made has actually been embedded into the Norwegian Sovereign Wealth Fund. So they are the largest, but you get a lot of Middle Eastern sovereign wealth funds as well. There's a Saudi Arabian one, and there's stacks of them. Alrighty, so that's ownership data. Let's look at financials as well. So before, when I showed you that SQL snapshot with BHP, and I was sort of saying, oh, here's a bunch of accounting items. Well, actually, that SQL database drives all of these numbers here. So this key items snapshot basically gives you all the key components of your, well, in this case, your income statement here. Then there's a balance sheet down here, and if I could actually work the computer out, I'd actually scroll down, but you would see things like current assets, current liabilities, non-current assets, non-current liabilities, common shares. You guys have done accounting, haven't you? Yep. So all that type of stuff should be familiar. Also, so you've got basically your sales of GE. You can see here, really, in 10 years, it has not grown in terms of sales. And in fact, its gross income has actually shrunk. So the further down you go, the more expenses you take off, obviously. The EBIT has shrunk as well. And although your net income is only maybe 10-15% lower than it was 10 years ago. And also things like margins. You can see a lot of that's actually been driven by margin compression. So it looks like that there, in terms of per unit sale, their margins are actually contracting, which seems to be the reason why their business is not nearly as profitable. Profitability actually itself, it depends on lots of different moving parts. Obviously, you need to sell your widgets, but also what's the costs involved, and finally, those costs are cash flow into operating costs as well as into financing costs. So if you have to borrow some money, a debt, you'll have to pay interest on that, and those interests are part of the the financial expenses of the company, and they will decrease your net income. But debt can be good because it means that businesses otherwise that needed to have access to capital can actually get access to capital. And debt would typically include bank loans as well as bonds. They're the two main forms of debt. I wonder if I can actually... let's have a look at the income statement in a bit more detail, just for a sec. So you can see a lot of the stuff that I was explaining about before. Sales, there's your cost of goods sold, so there's an expense. There's a sales, general and admin expense, other expenses. There's your interest expense, your financing expense, etc. So, and then finally you end up with your net income. By the way, that's last 12 months. That means on a rolling 12-month basis. So most of these numbers, in the US, they tend to report on a December year-end basis, but they also report on a quarterly basis. And last 12 months basically means if you've already reported 2 of your quarters, then it's basically taking those 2 quarters and then the previous 2 quarters of the last year and adding them together, and that's what last 12 months is. So effectively, you've got a rolling quarterly window, and that's probably a better reflection of really what's going on in the company versus just using the last annual data. And as quants, we'll want to actually use last 12 months. Let's have a look at time. I wanted to show you a few more things, because I suppose what I wanted to emphasise is that the accounting side of the quant equation is critical. Ingesting
balance sheets and income statements and being able to do something with them that actually makes sense to the markets is critical. And all of these accounting items are absolutely critical in formulating that. So, whether, like return on equity, probably one of the most critical quality signals is determined by taking your net income and dividing it by, well actually, if I could learn how to scroll down on this, I would show you, but basically your common equity will be down here. So net income over common equity gives you your ROE, and that's what drives, and that's one of the factors that drives markets in a fairly substantial way. Basically, it's telling you what your return on your investment is. And I'll just pick one more, which is the ratio analysis. And yeah, you get a bunch of margins, return on assets. There's your return on equity. There it is, 11.75. That's actually not too bad. It's actually dropped, but it's actually not too bad in this environment. And lastly, so just giving you really a taste of the different data sets that quants do use is the estimates data, and this is basically your consensus estimates. Basically, what they do, what FactSet does, is that they take the estimates from all the different brokers and calculate an average or a median, and put that all together and come up with their median estimate forecasts. This is known as a sentiment factor, and it drives markets. And well, I think that sort of ends the sort of demo. Is there any questions about the demo? Anything you want to have a look at? No? You want to go home? Is there anything you want to look at? No? No? Or you all want to go home and do your assignments? All right, we might take another break there.